Gold prices climbing higher on Monday after falling 7% last week. All right, Phil, take it day by day. What's the main reason gold's going higher today?
Well, we're seeing a bit of short covering coming in, really, and we're starting to work our way back through psychological level of 1600. I mean, 1620 is going to be your 200-day moving average. That's your next level of resistance. Earlier in the day, we were moving our way up to it. Then we started to back off. So I think we're going to float right around these levels.
But how soon does gold need to close above that 200-day moving average of 1620 for this move to really count?
Well, the thing is that I'm a little skeptical on the move here because of the fact that we've got thinner trading this week. Really, I'm not anticipating that kind of move, an aggressive move upwards into next week as traders will reposition themselves ahead of the start of the year.
So then what's the range here? Is 1620 the resistance, and what's the support?
Yeah, 1562.5, that's going to be your level of support. That was last week's hook low. Below that is going to be 1535. That was at September 26th low. We've got to hold those two levels. 1550 might be a minor psychological support, but really 1562, 1550, 1535. Those are your levels.
Now, with light volume and choppy trading like you mentioned, do we have to be worried about another correction to those levels, or do you think we'll stay really tightly range bound?
Yeah, I think that we're just going to coil sideways. I don't think we're going to see too much movement to the downside unless something really negative comes out of the Eurozone because of the fact that the dollar's been rising really aggressively here in the last week to 2 weeks. And gold has really been hinging on the euro, and it's terrible. We need to break away from this currency aspect and get back into the safety play.
Now, have you noticed any major shift in investor psychology after last week's sell-off?
Yeah, I mean, I noticed that a lot of people were, watching it from a deflationary aspect rather than inflation. Every time I would talk with, other brokers and traders and clients, they would always look at gold as that inflation play, and everyone thought that the Eurozone was just going to print their way out of that mess. And now it seems like they're really resistant to doing it. They're trying to implement some kind of fiscal responsibility and austerity measures, and it's got traders a little bit nervous, a little bit skeptical.
And you originally had said that $2,000 gold was a given for 2012, so do you still feel that way?
Yeah, I feel that way, but we need other catalysts to get it up there. I mean, we need increased geopolitical tensions. We need Europe to really just go full force with a quantitative easing plan, and we need the U.S. to do the same.
All right, thanks, Phil. I really appreciate it. So gold going to be choppy for the next couple of weeks.